All right. Good morning, everyone. Good morning. Good afternoon. Welcome in. Hope you guys are all doing well for yourself. And today is Wednesday. We're obviously looking to engage with FOMC here. All right. All right. So anyway, okay, Nasdaq. Obviously a massive drop down here. I mean, ES was really just creeping up on us with, subtle bearishness, just like really showing its hand with, just excessive relative weakness here. So, last night we were able to drop down, right? Touch that daily order block level, right? Sweep out the previous daily low. We rise up, take internal buy side liquidity here, right? And then just smash down right here at FOMC. And you look at this here, and it's like, okay, ES was clearly not willing to have a move up to the upside, right? So here on Wednesday, December 11th, it rallied up, made an attempt at the highs, and at the same time, Nasdaq was just pumping, all up in all-time highs. And now we're creating a daily swing high and smashing through this opposing daily fair value gap. And I'm actually going to drop down to the lower time frames quick. And I'm going to show you what we're delivering down into. All right. And that is going to be, if I can zoom in here, going to be this new week opening gap here from last week. Okay. So why is this important? Why does this matter? Why does it matter? Because it's a very, very key higher time frame level that offers fair value for price, and we've already taken out internal sell side liquidity. How far can price go down below sell side liquidity? Look for new week opening gap. So with that in mind, I understand this range could be a potential reversal point for the catalyst to set the stage for a model number 3. Now I say model number 3, I'm throwing it out there. I don't want to get everyone in the mindset of, okay, where's our entry? There's no entry right now. All right, all we did was smash down, work up, drop back down. Now we're just kind of moving, kind of side by side. So anyway, on the other hand, on the contrary, we have ES also delivering down into new week opening gap, an old one. I believe we touched the high end. It's not confirmed, but let me just drag it to the right. Okay, yes, we did deliver that new week opening gap as well. This blue shaded area here, and this is also a discount array. So before I show you that, you can see all these internal sell stops here have been ran for the marketplace now. So Wednesday, November 27th, daily sell side liquidity has been tagged, right, along with new week opening gap. So I'm going to be expecting some type of short-term reversal here. Okay. And then on the daily chart, all right, we're just simply, actually the weekly chart, I stand corrected. We have this fair value gap now delivered. Okay. Let's see if we can see a run against those who have been selling. So honestly, preferably we'll kind of leave these intact here, right, for high probability, and then we'll kind of slide off here, maybe drop down one more time, and then we'll make a run and create a model number 3 up to these internal highs. Now what's going to be above these internal highs? Premium fair value gap, premium fair value gap. So we have inefficiency above liquidity. And then if you go to the 5-minute chart, I mean, just a massive 5-minute imbalance. Okay, and then, I mean, as you can all see, a very large 15-minute fair value gap here that's going to be primed to be returned to. Okay, now that doesn't mean I need, I'm not going to be looking for, midpoint here to be returned to, right? I just need, would expect a lower 25%. And by the way, guys, I'm not sure if you're familiar with fellow Justin Werline. So I'm bringing up his name here because he's rather large in the trading space, gained a huge following, right? And he also did, I don't know if it was AMP Live, but anyway, did a live account challenge. I think it was like 5K account challenge. Okay, what this is not going to be is me starting up an AMP Live account with you guys. I'm still undecided between 5K and 10K. Okay, that'll be confirmed somewhere in January. But what this is not going to be is me loading up an AMP Live account with you guys, trading alongside you, right? Every trade taken live. And then just like, that's it. Like randomly just saying like, oh, I stopped trading it, and just like stop giving updates and like shower and hide it with a bunch of, random psychology videos. Okay, that's not what's going to happen here. Okay, we're taking this shit to the finish line. Okay, that's what we're doing. We will prosper. We will follow our plan diligently every single day, day in and out. Does not mean it's not, everything's going to be perfect, right? We will have red days, potentially even red weeks. That's going to happen throughout the year, right? But the way we weather and respond to that type of thing is what's going to take us out to that finish line and out on top with a significant gain by the end of the year. Okay, another thing that I'm not going to do is promise you 11,000% return or some crazy, feat that no trader's ever seen before. Okay, all I can promise you is consistency. So yeah, just so we have some ground rules here. There you go, guys. There's your expectations. In trading, something you feel you've struggled with earlier and this year come together even more. Absolutely, 1000%. So honestly, what I think is I just became more nonchalant in my trading in the best possible way, and it just really allows money to free flow to you so much easier, right? And it's just about having the abundant mindset. I didn't really have it, like I was, obviously seeing success and whatnot in the years prior and doing decently well, but like really huge growing this year. This year is just like a huge maturity in myself and in my trading. Anyone that's been with me for any period of time, I'm sure they probably see it too. But um, and not to mention like the insane perspective shift that you have after you have a child. It's like insane, and it just really switches your priorities and what you're actually doing this for, and it gives you a whole different light of motivation as opposed to like last year, right? I was doing very, very good, just similar to this year, but my motivations were not so, you know, uh, just not as good as they were this year. And it's just my why is so much stronger, and like I said, just the nonchalance that comes with my trading now. It's like I don't care if my stop loss gets hit. I don't care. I'm not worried about any of that stuff. I'm not fearing my stop loss getting hit. I'm not fearing losing a trade. I'm not fearing failing or falling flat on my face. And because of me not having that fear, I succeed so much easier. Okay, and I really hope this is all making sense because it's just like a huge shift in my trading and really is just taking me to an entirely new level that I hope for every single one of you, which every single one of you will reach if you're able to get past one of the biggest battles that most people in the modern day face, which is just submitting to instant gratification. And instant gratification isn't going to get you anywhere on a long-term basis, and you got to get that shit out of your head. Seriously, it's very, very hard nowadays with TikTok and how they're kind of wiring our brains. But that's a topic for another discussion. But yeah, that's pretty much what I have to say there in terms of progress this year. It's been insane. By far my biggest growing year. By far, not even close. And also, I have to say too, like just detachment in general. Like if we're just talking about life, not like let's put the trading aside, which obviously directly benefits my trading. Like before this year, like seriously, I was like just so hard on myself. Anytime I messed up a trade or I did something wrong or like just anything, I was like very, very hard on myself. And um, I was just I cared way too much about things that did not matter. Way too much, wasting a ridiculous amount of times on stuff that doesn't matter. And now when it comes to this year, my priorities, I have to say, are much, much better. And just overall, just like I said, detachment and nonchalance in the best way possible. Okay, and like any troll that comes at me, like I don't give a fuck. You going about your day, you think what you want about me, that's cool. I'm gonna keep making my money and doing so for my members as well. That's just the type of stuff that's all in the rear view now. I don't care about any of that. Um, and overall, just detachment from the overall world here today. It's just like I'm kind of in my own world here, doing my own thing, and trying to make it in a positive life to change lives. Okay. So anyway, that's pretty much it, guys. Hope that made sense because it's just been great. But enough talking about myself. We're looking at the charts here. I mean, just a massive candle here. Honestly, I'm just really not sure if I'm gonna have the chance to engage with this, which is completely fine with me. So I mean, 1-1, 1 for 1 on the week here so far, and yeah, I intend to keep it a profitable week. So I'm not gonna execute unless I see my model. See, listen, that's the thing that separates our group from every other group. Like, we can go an entire session with watching it and not take a trade, right? We can go without taking 10 entries just to get, take a whole handful of losses just to get that one winner, right? We can get in here, one shot, one kill, and be done, make our money. Like, we understand that frequency of trades is very, very important. And the most successful trader statistically across any single brokerage firm you can possibly look up, the most successful traders have the lowest frequency of trades. Okay, so like I said, it's gonna be it's gonna be a big hurdle for you. Like if you're looking for instant gratification, it's not gonna be a great time for you here. I promise you that. And while you will make money, yes, but instant gratification really will block a lot of blessings for you. And if you get past that, and really just shake yourself out of it, get into a disciplined state and submit to the long term, you'll you'll do great. So anyway, we're obviously continuously sliding down here, tapping down to the very low end of new day opening gap. Now we also swept Friday's low here. Okay, It's got to give a nice nod to Friday again because Friday was beautiful. Best day of this week, or best day of this month, and of whatever we had in November by far. This day here, beautiful. So newly opening gap delivered. We have all internal stall stops driven down into as well. Honestly, I'd like to, at this point with how low we traded, I'd like to see it kind of take a dive down here now. And now also what I'm going to do is I'm going to map out this very, very large hourly for rag gap. So I mean at this point, right, like I said, if I'm actually going to look to engage, by the way, let me delete that because it's not needed anymore. If I'm actually going to look to engage, now that we had this second displacement to the downside, right, we have our first one here at 2 o'clock, right, and then 2:30 opens. We have a second displacement to the downside out of this consolidation, right? So whenever I see this, okay, now that we deliver sell side and key levels to the downside, if I'm going to look for a model number 3, I'd only look for a midpoint of the nearest term 50-minute for rag gap. I wouldn't look for it to return down in here because of how aggressive and extended it's been. Usually it'll, come back for any short-term stops here and then work up into the first presented 50-minute for rag gap rather than this one here. So at this point, I would expect this to act as a breakaway gap with how aggressive we are, right? And kind of same deal here in ES. So we're going to see what we do once we open on this new 50-minute candle, see if the next one can work its way up into back up into new week opening gap, which are these 2 red lines, as well as the 50-minute for rag gap. So we'll see. So, I mean, obviously, I don't have to say it, but we have a severe discount priced in, right? I don't have to pull my fib to show you that, but this here will be our actual dealing range. So, you can see that we're right in the lower end of the sweet spot here between 62 and 79%. So, small little correction right there. It doesn't mean anything to me for the time being. Really, I'm not going to expect anything to take place until we open on the next 50-minute candle, and that can potentially set the stage for a rally up into what will be a large 50-minute for rag gap, okay? So instead of trying to chase the move, I look and anticipate a clear structure model to scalp to the upside, right? Go against those who have been shorting. And then once we get that retracement, then you can try to frame some type of continuation, right? So just stalling a little bit here, which I like. Okay, like I said, about 6 more minutes here till we open on the new 50-minute candle, which is what I'm really being anticipating of. In a perfect world, we'll open on this next 50-minute candle, and then we'll work in whatever wick is left behind here, just the upper end of it, and then we'll set the stage for a rally up into this 50-minute gap. So if that does take place, I would simply just target midpoint here, right? But then if it just keeps dropping on the other hand, then I'll look to close up towards market close. Okay, about 4 more minutes here. So I'm really just waiting to see what this next 50-minute candle is going to do. I don't really care what's going on the 1-minute chart, right? I just want to see if we can drop down below the short-term low here, and then what we do in the opening of that 50-minute candle, see if it can run for a rag gap that'll be created on the 50-minute chart. Now, I only care about a potential return up into this 50-minute chart because it'll be doing 2 things. It'll be repricing in an inefficiency, right? And also going against those who have been shorting, making money on this massive drop down. And we're also trading down into key levels that I already explained several times here now. All right, so it actually takes the other route here and just dumps, right? So I believe it takes out that short-term low now. There we go. So this is fine here, but I just don't really want to see it keep slipping down pretty deeply. I want to see a quick rejection away from this short-term low heading into the opening of that 50-minute candle that I explained. So that's really what's going through my mind right now. And if it takes place, I'll certainly be a part of it. If not, then we'll just keep our, preserve the money that we already made this week. So yeah, like I said, it's not about the frequency of trades that you're taking, because the reality is we can take one profitable trade this week and be done. We can keep the $800 that we made yesterday, right? Assuming that you use one contract. You can keep that money, stay stagnant for the rest of the week, and guess what? You're sitting on the top of, looking down on everyone else that obviously fell victim to what most people do, 90%, and that's actually lose money on the week and not be profitable. So putting that in perspective, right, you just understand what's really needed for success here. It's not taking trades every single day. It's not trading every session. It's not taking, a lot of trades, because I told you guys the rule for the AMP account is no more than 2 trades in a day. Okay, these aren't just some random rules that I pulled out of nowhere, right? It's derived from 5 years of experience and being real with myself and understanding what has worked for me versus what has not. What has made me the most money rule wise versus what has made me lose money, right? And as a result, I come up with the rules here, and that's what I'm going to abide by, and that's what's going to make us our payment. I like the quick rejection away from the short-term low here. I want to see if it can maybe stall here. In about 1 minute, we're going to open on the brand new 15-minute candle, which is good. Okay, we're still holding the low of the hourly for rag up with the body for the time being. Okay, ES still diving down. Like I said, if it wants to keep lower, the next draw would be midpoint of that daily wick. So I'll show you that one more time. Okay, I'm also going to map out this daily inversion for reg gap as well. So like I said, brand new 15-minute candle now opening here. I would really like to see if we can make a run for at least the 25% of this large 15-minute bounce. Like I said, I'm not worried about this one now with that second stage expansion, right? Because I know that this should act as a breakaway gap if we had that second stage, which we had here. All right, so there's that wick being worked in. And here's that 15-minute Ferrari gap. So I'm actually just going to go ahead and map it out here for us, so we can see it on the lower time frames. So just diving down here, not showing a willingness to actually do that. So trade drive back up into this up candle here, immediately rejects away. So what we're looking at here with this 15-minute gap, right? If you take a look inside of the 15-minute gap, which is what you always want to do if you're looking to go against and trade model number 3, is is there any short-term highs inside of the 15-minute Ferrari gap? And that's going to be right here. So if it were to present anything, this would be the most high probability nearest term target above the swing high here. Okay. So definitely not showing me any signs of reversal here. You can see that ES just tagged that midpoint of the wick now. So it's just one of those days where, you can wait for a retracement, you can wait for that reversal, but just keeps creating more highs, more lower highs, dropping down, and there's nothing I can do with that, right? If I shorten here and I get lucky and it drives to the downside, that's not doing anything good for me in the long term. It could be cool short term, right? It satisfies my dopamine real time, and I make whatever amount of money for the time being, but that's not long term sustainable in the slightest. And I'm looking to build long term monsters inside of the marketplace here. I always explain this because it's very, very important, because I'm not building you guys up just to have short term success. Okay, I want to see 10 years down the line you guys still show me payouts. 20 years down the line, 30, whatever, however long. As long as these markets are available and open for us to trade, this is a skill set that will forever have us paid once you master it. Okay, so once you master it, it's wraps. Okay, there you go. You can come into the marketplace and you have your side income, main income, whatever it is. You have a source of income here with this skill set. And that feels empowering, doesn't it? And that's great. Okay, that should be the only motivation you ever need. Okay, not a car, watch. Just the mastery of a skill set like this that can take that extra stress off your back financially. So we have a subtle, not the easiest one to see, but a subtle 3 drives pattern here down to that discount for Ray gap. We have 1 drive here, 2nd drive taking sell side liquidity, 3rd drive taking sell side. And now initially we displaced above this opposing up candle here, all right? And the next thing I'll look at is this inversion for Ray gap. And then here's our 15-minute gap that we want to see delivered, as well as this swing high here for trailed buy side liquidity. So that's what we want to see be delivered with this subtly setting the stage for a potential reversal. Short-term reversal, not a long-term. Okay, so initially looks enticing, okay, but there's not really an entry point for the time being. Could potentially be so, but I want to see it get past this up candle here. It's just too menial. It's just not enough for me, okay? I want to see us get past this inversion for Ray gap as well as this up candle right here, okay? And then I'll look to potentially scalp up into the high here. It's not enough for me in an excessively bearish market to see one little, one little rise higher. It's like, oh, time to buy now, okay? Where I could be correct, right, and I could make money off of that potentially. That's just not how I trade. That's not model number 3. That's not it, okay? I teach it very specifically inside the private mentorship tab. And like I said, in contexts like this, I could be wrong. I could utilize this gap here and then trade higher towards the buy side, but I wouldn't be following my rules even if I did that, even if I was right about that in this scenario here, which if you watch signatures and price, the requirement would be to actually have a strong push through an opposing ray like this one. Okay, not this little small up candle here. And not to mention the time aspect. Like if something like this took place around 250 to 310, I would place a little more significance on it. Now, our actual macro, the only erratic one, is actually going to be, if I map it out here, our final hour macro is actually 315, 345. So whenever we're trading the final hour, right, this is where you'll hunt for your setups inside of this hour. Really, I like this for the time being, but I want to see it really prove itself to me, okay, which right now it hasn't, okay. I'm not a market structure shift trader, thank God, all right. If I was, then, yeah, I don't know. I mean, admittedly, that was something I used in my analysis some years ago, but not anymore, okay. Market structure shift is, I think it's just pattern retail trading, so I don't use that in my analysis. So I use changes day delivery. That's much, much more powerful though. Okay. So anyway, this failed, not to my surprise, because it just simply utilizes this inversion for value gap plus midpoint of this up candle. Isn't able to get past that. So as a result, I obviously don't engage with this. Now let's bring another scenario here. Let's say that this like really remained heavy here and just completely had a strong push above this up candle here, right? Then I would look to utilize this as a breaker, right? And preferably to make it even smoother, we'll have some type of small gap coupled with the breaker here, right? And then any small little subtle retracement, that's where I buy. And then target midpoint of the 50-minute fair value gap. Okay, so that's the criteria that would have been met, that meets the standards that I teach for you guys in video format, right? For me to actually take this trade, right? So I'm easily able to filter this out as a low quality where everyone else would probably be getting in there and trying to catch a bottom, which I'm not because it didn't show me the proper signatures to do so. Okay, very, very simple. So it's not just me like, oh, look, see, I told you so. I told you this wouldn't work out. And, after I traded it, right? No, I know when to stand by versus when to actually trade. Okay, I'm not going to take a loss and then be like, oh, yeah, it wasn't good because of this reason. No, I'm telling you beforehand the why and the how and what I look for to actually look for the model. Okay, I sat through this. We had nothing but trend to the downside, right? And I'm not someone that just, sells as we're dropping down. I sell as we rise up, right? But other than that, guys, I hope you got something out of this. Hope you guys enjoy the remaining portion of your evening or wherever you're at in the world. Enjoy your morning, whatever. Always a pleasure working with you guys as always. And we're going to be coming back very, very strongly tomorrow morning at 8:20 a.m. and looking to hunt for our model. So very interesting FOMC here. Definitely some good things to come here. Higher time frame wise. But other than that, guys, yeah, take care.